Good afternoon and welcome to another session of Ask Judge Carol Live, where I'm here each week on my YouTube channel at Judge Carol Official to break down the law on different topics and make it easier for you to understand. So I had a little bit of a glitch, so some of you may not be able to join live, but for those of you who are here on the replay, welcome. So today I'm going to be talking about life insurance, and in particular, the issue of whether you should name a beneficiary or name your estate as the beneficiary on your life insurance policy. So first I'm going to touch on a couple of facts regarding or some basic points about beneficiaries and life insurance. So what is a beneficiary? Well, when you purchase a life insurance policy, you get to name a beneficiary, and that is the person or persons who will receive the death benefit from your life insurance policy when you die. So you can have one beneficiary or you can have more than one beneficiary. And that would be a person who you put their name down on the form when you are taking out your life insurance. And if you die without naming someone, then the proceeds of the insurance policy will go to your estate, which is the sum of all your possessions, financial assets, as well as your debts. All of those are comprised in your estate, meaning in this case, we're actually talking about your personal estate, not land, although land is part of your estate as well. And when you name a beneficiary, then the life insurance policy proceeds when you die are paid to that person or persons who you name as your beneficiaries. So who can be a beneficiary? Well, you can name your spouse, your child or children, or dependents, persons who rely on you, for support, or another family member, or even a charity as a beneficiary of your life insurance policy. And if you name more than one, then the insurance company will divide the proceeds of the policy according to the percentages. Usually they will ask you to indicate, is it 50-50, 25% each, or whatever, and you can indicate. And if you don't indicate, then they will likely share it equally amongst all of the named beneficiaries. Sometimes people ask about naming their children who are underage, so under the age of 18, if they can be named as a beneficiary. You can name them, but you will also need to name a trustee, because a child, meaning someone who is not 18 years of age or older, cannot legally own property, hold title to property, or deal with the property. So the money will be paid out to the trustee, who will hold it for the benefit or apply it for the benefit of the child or children. So you can name a single beneficiary or you can name multiple beneficiaries. So what happens if you don't name someone as a beneficiary under your policy? Well, then it goes to your estate. And if as I mentioned a few moments ago, if you have a will, then it is the proceeds of the insurance policy will be lumped together with your estate and divided as you have indicated, any directions you have given in your will. And of course, I would have discussed this in earlier episodes, I think episode 3 and episode 4, if you go back and listen to those regarding making a will. But if you also, it will go, so it goes in your residuary estate and is dealt with according to the terms of the will. Now, there's an important question, and there's a case that I'm going to discuss this afternoon regarding where a beneficiary has, where there was no beneficiary named for the policy, and so then the proceeds of the life insurance policy went into the estate, and then what happens to that money, those funds that went into the estate? This is governed by the terms of the Inheritance Act, which defines for us that, first of all, we're going to talk about the meaning of residuary estate, because that is defined in the Inheritance Act. And the Act says that residuary estate means every beneficial interest of the deceased, or they call them the intestate. Remember, that's the person who died without a will. They're called the intestate. So any interest, any beneficial interest of the intestate in real estate, real property and personal estate after payment of funeral expenses, administration expenses, debts, and other liabilities. So it's not, let me make this distinction here. I will reiterate it as we go along, but let me make this distinction. So if a person is named as your, if no one is named and you have left it simply to your estate, then your beneficiaries, the persons who are entitled to inherit under the Inheritance Act, will only receive the proceeds of that insurance policy after, you could almost say after everyone else has been paid, but after your funeral expenses are paid, after your administration expenses, which by that we mean the probate expenses, any debts or other liabilities that you have, all of those get paid out of that insurance money before your beneficiaries will see a dollar of it. So I need you to understand, if you are thinking that you don't have to make a will because you have an insurance and your family are going to be taken care of, remember that all of those people, all of your debts, funeral expenses, those get paid. And if anything is left over, then it goes to the beneficiaries. Whereas if you name your beneficiaries under your life insurance policy, your spouse, your children, your other dependents, loved ones, if you name them as beneficiaries on your life insurance policy, they will get those funds directly. It doesn't have to go into residuary leftover, of course, okay, because obviously residuary means left over. So there's no point in saying that, oh, these people are taken care of, I don't need to name them, I don't need to leave a will. A lot of people like to kick the can down the road. They, cover their eyes. They don't want to deal with it. What have you, and they just, they turn a blind eye, or they ignore a situation. They don't make a will, and then they don't name beneficiaries. And so what happens is you can have a big bust up, a big problem. Same thing that I was talking about with wills and probates and so on a few weeks back. It creates problems. So don't think that you are saving anybody. Don't hide it out of shame because you don't want to name the person or whatever have you. You are not helping anyone by not making a will and not naming beneficiaries. So The court says that the law says that beneficiaries are entitled to the assets of the estate after payment of debts in the proportions that are set out in the act. So in the order that is set out in the act. Okay. So what I'm thinking, so the idea is that if you name the beneficiaries, you're helping them. By not naming them, you're not helping them. And the residuary estate, based on, well, first of all, it's not just the residuary of the life insurance policy, because that just falls into the entire estate that you leave, whatever is whatever property, whatever other bank accounts and so on. It's all lumped together in that grouping and then distributed in the manner mentioned in the Inheritance Act. And it's worth repeating here. So if when you die without a will, you leave a spouse or a husband or a wife and no children, then your spouse takes your whole residuary estate, life insurance and whatever else. If you leave a spouse and one child, the spouse gets a half and the child gets the other half of your residuary estate. If you have a spouse and 2 or more children, the spouse gets 1/2 and the 2, 3, or 5 or however many get the other half of your residuary estate. Okay, so that's how residuary works. And the personal representative, the person who gets the letters of administration, is entitled and required to pay off any debts that you owe at the time of your death before anybody receives any of your estate. So just a quick aside here in terms of that point about paying debts. So the law has it such that if you don't pay your debts when you're alive, somebody is going to have to pay them when you pass on. So you're not avoiding your debts by not paying them. And you're not avoiding them also by not telling people, because creditors have an opportunity to make representation, to come forward, to make a claim, and so on. And creditors have really a first claim, particularly when there's no will. They have a first claim on your estate. So, and it makes sense, because can you imagine, as a community, if everyone was to go about their daily lives merrily racking up a whole lot of debts and not paying them, and then, when they pass on, the debts just stay there and the person who provided the credit has to suffer the loss, businesses would crumble. People wouldn't be able to carry on their affairs because they would have no way of having that assurance that the debts, that the money that is rightfully owed to them is going to be paid back. So you're not going to escape your debts even in death. All right, that's kind of a bonus point for today's session. You're not escaping your debts even in death. So please make sure you pay your debts as and when you are able, or make provision for the payment of your debts, and make provision to support your beneficiaries, those people that are relying on you, so that we don't descend into chaos. Now, I'm going to go into talking about a specific case where there was a life insurance policy that named an estate. So no beneficiaries were named. And then the personal representative, the issue for the court was whether or not the personal representative was entitled to pay the debt to the bank out of the proceeds of the insurance policy. So there was a gentleman, his name was Mr. Scavella. This is a case from the Court of Appeal of the Bahamas from 2022 that I'm going to be referring to. And it really illustrates very well the kinds of problems that people encounter with naming simply the estate as a beneficiary. And a couple of other points that we are going to touch on in terms of joint tenancy as well that come up in this case that I think you are going to find very helpful. So there's in the first instance in the Supreme Court, it was the children of the deceased. So there was a gentleman, Mr. Scavella. He was married. Before he was married, had a wife, and they had 2 daughters. He and his first wife, or the previous wife, they were divorced in 2011, and he died in 2012. So about a year and a half after the divorce, he died, but in the meantime, in there, he had remarried. And so when he died, he left a life insurance policy, and because there was no will, then his new wife, and I think I can say new because it was really only a year and a half between his divorce from the previous wife and the second wife or new wife. His beneficiaries were the new wife and his 2 daughters, who were both under the age of 18. And therefore, their mom, his ex-wife, had to be appointed as a guardian for the purposes of the court proceedings. Now, as it happened, the deceased, Mr. Scavella, and his new wife, they were joint tenants of a home that was mortgaged to a bank. The bank was RBC. And so they were joint tenants. The house was mortgaged to the bank. Mr. Scavella dies, and his new wife became the personal representative of his estate. And then the new wife, took the proceeds of his life insurance policy, which was a considerable amount of money. It was something like $160,000, $180,000. And she applied all of the proceeds of the life insurance policy onto the mortgage, which had been in both of their names, his name and his wife's name. And she applied it onto the mortgage to reduce the amount of the mortgage debt. Now, it didn't clear the mortgage altogether. The court case says that the amount of the life insurance proceeds was less than the amount of the mortgage. But what happened there was then, because she took all of the life insurance proceeds and applied it to the mortgage, then his 2 young daughters, who were both under the age of 18, didn't get anything. And so through their mother, they sued the new wife, who was the legal personal representative and the lawful personal representative of Mr. Scavella, for their share, their 50% of the estate, or their 50% of the proceeds of the life insurance policy. And so it was obviously it was quite a battle, because Mr. Scavella died in 2012, and the case didn't come to court until 2017, so some 5 years after he died. And the ruling of the Court of Appeal, the final ruling of the Court of Appeal, wasn't issued until 2022. So this is a 10-year battle that we're talking about, a 10-year battle, because someone failed to name beneficiaries. If he had simply named his daughters, if he had named his wife, if he had simply named his daughters, they would have been able to benefit. So here it is now, two young girls, they've lost their father, and they are unable to benefit from the life insurance. And why did that happen? So, as I said, the dispute arose because the personal representative, who happened to be his widow, applied all of the insurance monies to the bank debt. And the children then came after her and said, no, you shouldn't do that because the Inheritance Act says we are entitled to 50%. So they went to the Supreme Court. The judge in the court below, in the Supreme Court, found in favor of the children, the daughters, and then the new wife appealed, and the Court of Appeal says, no. Here's the point. When Mr. Scavala and Mr. and Mrs. Scavala were joint tenants of this home, right, that was mortgaged to the Royal Bank, the court said that when he died, the joint tenancy ended, and so the entire interest went to the new wife. Okay, that's fine. We get that. However, even though the joint tenancy ended and the new wife was the sole owner, the joint tenancy did not extinguish his debt to RBC as a signer of the mortgage to the bank. Did you get that? Even his interest in the home ended when he died, and his share then became amalgamated, if you will, or actually it didn't become amalgamated, it simply fell away, and the new wife was the owner of the home. But as mortgages often do, it says they are jointly and severally liable to the bank. His estate was still liable to the bank for the full amount of the debt due under the mortgage. And because it was a proper debt of his estate to the bank, the wife, who was his widow and his personal representative, was fully within her rights to take all of the insurance money that came into his estate when he died and apply it to that mortgage. So this is why it is very important for you to name your beneficiaries in your life insurance policy. So the personal representative pays whatever debts there are due from the estate before any beneficiary gets anything out of it. So he had other bank accounts, whatever other property he had. I think he also had he had a credit card debt, and at some business establishments where maybe he had an account and had credit, then those persons, though the credit card and those other establishments also would have received the out of the estate, whether it was from monies in the bank account or the life insurance policies. So that's the lesson for today. I hope you have found this to be informative and helpful, and that you act on what I have said. If you are interested in making a will, which I highly recommend, I invite you to get a copy of my will preparation checklist. It's completely free. You can send me an email at info@judgecarol.net and ask for a copy of my free will kit, and I will send that over to you. If you have a question that you would like to raise with me and have a one-on-one session, I do have appointments available. So you can also send me an email at info@judgecarol.net or send a WhatsApp message to 451-4855. That's area code 451-4855, and we will send you the booking details to book a one-on-one session. So thank you for tuning in, and I look forward to seeing you on another session of Ask Judge Carol, where I am on a mission to empower you through, I'm empowering lives through education about the law. Thank you. Happy Independence, Bahamas. Oh, wrong side. 53 years. Happy Independence, Bahamas. And I look forward to seeing you for another session next week of Ask Judge Carol Live. Thank you.